QumulusAI, a direct listing on the NASDAQ Global Market. Executive Summary. This report provides a comprehensive pre-listing analysis of QumulusAI, an emerging provider of high-performance artificial intelligence cloud infrastructure. QumulusAI began trading on the NASDAQ Global Market on July 16, 2026, through a direct listing, a method that allows existing shares to trade publicly without the company issuing new equity or raising immediate capital from the listing itself. QumulusAI operates in the rapidly expanding AI infrastructure market, positioning itself as what the industry calls a neocloud provider. The company's core business is providing GPU as a service, or GPU-AaaS, to small to mid-sized enterprises, AI startups, and research institutions that it argues are underserved by traditional hyperscale cloud providers like Amazon Web Services and Google Cloud. The company differentiates itself through a vertically integrated business model combining purpose-built, high-density data centers, proprietary on-grid and off-grid power generation capabilities, and a promise of rapid deployment, bringing GPU capacity online in approximately 90 days. This cloud plus power model is designed to eliminate energy bottlenecks and provide cost-effective, high-performance compute. Financially, QumulusAI is a high-growth, pre-profitability entity. SEC filings indicate a history of operating losses and revenue of $10 million for the 12 months ending September 30, 2025. However, the company has issued very ambitious forward guidance, projecting $300 million in forward annualized recurring revenue for fiscal year 2026. That's a roughly 30-fold increase in 1 year. This growth is supported by substantial financing, a $90 million convertible note facility, and a $500 million asset-backed credit facility, both intended to accelerate procurement of high-demand NVIDIA GPU hardware and expand the company's data center footprint. The company's stated goal is to expand capacity from 18 megawatts in 2026 all the way to 2.5 gigawatts by the end of fiscal year 2027. Because this is a direct listing rather than a traditional IPO, there is no underwriter to stabilize the initial trading price. That introduces potential volatility for new investors. Key risks include intense competition, heavy reliance on a single primary channel partner called RunPod, dependence on a limited number of GPU suppliers, and operational risks around power procurement. Methodology. This report is based exclusively on primary source documents. The main source is the series of S1 and S1A registration statements filed by QumulusAI with the U.S. Securities and Exchange Commission between December 2025 and June 2026. Secondary sources include the company's official website at QumulusAI.com. Tertiary sources, Reuters, Bloomberg, NASDAQ.com, and CNBC, were used only to corroborate listing dates and general market context. If information on any topic was not disclosed in these sources, it is explicitly noted as not disclosed or information not available. No information has been fabricated or assumed. Company Overview. QumulusAI is an AI-focused cloud infrastructure company. Its stated mission is to universalize access to AI compute by building and operating a distributed, vertically integrated cloud platform designed specifically for artificial intelligence workloads. It operates as a neo-cloud provider, a new generation of cloud company focused on specialized, performance-intensive niches like AI, often with a more flexible and asset-heavy model than traditional hyperscalers. The company's history is more complex than the name suggests. It was officially founded in 2019, but the QumulusAI brand is actually quite new. The story begins with two businesses started in 2019, Waha Technologies, a blockchain hosting firm, and Spree Commercial Group, a data center asset holder. These two entities merged in 2022 to form Global Digital Holdings, Inc. Then, a pivotal shift happened in April 2025 when Global Digital Holdings acquired the CloudMinders, Inc., a firm specializing in GPU-as-a-service assets. Following that acquisition, the combined entity rebranded as QumulusAI in August 2025, pivoting away from its blockchain hosting origins to focus squarely on the AI infrastructure market. Worth noting, before pursuing the direct listing, the company briefly explored a reverse merger with a pharmaceutical company called Vincerex Pharma in early 2025, which would have valued QumulusAI at $285 million, but that agreement did not proceed. As of June 1, 2026, QumulusAI established its corporate headquarters in Atlanta, Georgia, at Georgia Tech's Tech Square, embedding the company within a major hub for AI research and talent. The company also maintains an office in Oklahoma City, Oklahoma. QumulusAI filed its initial S-1 registration statement with the SEC on December 31, 2025. After several amendments, the SEC declared the registration effective on July 14, 2026, with trading scheduled to begin on July 16, 2026, under the ticker QMLS. Products and services. QumulusAI's core offering is high-performance GPU as a service, providing the specialized computing power needed for developing, training, and deploying artificial intelligence models. The company focuses on delivering raw infrastructure performance and flexibility, rather than building its own AI software or models. Its services run on cutting-edge NVIDIA GPU hardware, including the Hopper series, that's the H100 and H200, and the next-generation Blackwell series, specifically the B200 and B300, to support the most demanding AI workloads. The company structures its AI cloud offerings into 3 product tiers. First, QumulusAI Cloud. This is the entry-level, shared access product. It's designed for AI inference, experimentation, and smaller fine-tuning jobs. Customers access a pool of shared GPU resources and are billed based on usage. It's flexible and cost-effective for developers and small teams who don't need dedicated hardware around the clock. Second, QumulusAI Cloud Pro. This tier offers dedicated GPU resources, one-to-one access to either single GPUs or multi-GPU nodes. It's targeted at enterprise-grade training and consistent performance workloads where you need guaranteed access, not shared resources. This is for business-critical AI model training. Third, QumulusAI Cloud Pure. This is the company's bare metal offering, direct, exclusive access to entire GPU clusters with no virtualization layer in between. That elimination of what's called the hypervisor tax can deliver meaningful performance gains. It's intended for customers with extreme performance requirements, like those training very large foundational models. In addition to its AI cloud offerings, the company's SEC filings indicate that business operations also include hosting services and legacy blockchain mining activities, reflecting the company's earlier corporate history. Business model. QumulusAI operates under a vertically integrated cloud plus power business model. This means direct ownership and management of 3 critical layers of the AI compute stack: power generation, data centers, and the GPU cloud platform itself. By controlling all 3, the company aims to overcome the primary bottlenecks of energy availability and infrastructure deployment speed that challenge the entire industry. The company uses what it calls an inference-first, demand-led deployment strategy. This means placing compute capacity closer to customer demand, using a network of co-location data centers and modular footprints, rather than building massive centralized data center campuses over long timelines. QumulusAI claims this enables it to bring new GPU infrastructure online within approximately 90 days and start generating revenue, compared to the 12 to 24-month cycle it attributes to traditional providers. Power generation is a pillar of this model. QumulusAI uses both on-grid power and its own off-grid, behind-the-meter power solutions, including natural gas-powered turbines. This is designed to ensure operational continuity and predictable energy costs, a major advantage in a market where power availability is increasingly becoming a bottleneck. The company's target market is what it calls the mid-market gap: AI-native startups, machine learning teams within larger companies, and research institutions. QumulusAI argues this segment is often underserved by major hyperscalers, which may require large enterprise-scale commitments, lack configuration flexibility, or have long GPU access wait times. A key part of the go-to-market strategy is the company's reliance on a single primary channel partner, RunPod. As disclosed in SEC filings, a substantial portion of its GPU-AAS revenue comes through RunPod, which gives QumulusAI access to a large existing community of AI developers. Industry and market analysis. QumulusAI operates at the intersection of cloud computing, artificial intelligence, and high-performance computing. The overarching market opportunity is driven by the exponential growth in demand for specialized computational power needed to train and run increasingly complex AI models. This demand has created a significant supply-demand imbalance for cutting-edge GPUs, which is the core investment thesis for specialized infrastructure providers. The market is currently dominated by a handful of hyperscalers: Amazon Web Services, Microsoft Azure, and Google Cloud Platform. These companies have vast global data center footprints and enormous financial resources, but their scale can lead to less flexibility and long lead times for the most advanced hardware, creating an opening for more agile competitors. That opening has given rise to the neocloud category, in which QumulusAI places itself. These AI-focused cloud providers compete not with a broad suite of services, but by providing specialized, high-performance GPU infrastructure with greater speed, flexibility, and potentially better cost efficiency for AI-specific workloads. One important note: in its SEC filings, QumulusAI does not provide specific quantitative estimates for total addressable market, serviceable addressable market, or serviceable obtainable market. The market opportunity is framed qualitatively, emphasizing broad unmet demand for AI compute and the strategic gaps left by the largest cloud players. Financial analysis. The financial profile of QumulusAI, based exclusively on data from SEC filings and official announcements, is that of an early-stage, high-growth company with a history of operating losses. As an emerging growth company, it is elected to comply with reduced public company reporting requirements. According to financial news reports citing its filings, QumulusAI recorded $10 million in revenue for the 12 months ended September 30, 2025. The company's S-1 filings explicitly state that it has a history of generating losses and may not achieve or maintain profitability in the future. This is typical for infrastructure-heavy cloud companies, where substantial upfront investment in data centers and hardware precedes revenue generation at scale. Looking forward, the company has issued aggressive guidance. For fiscal year 2026, QumulusAI projects $300 million in forward annualized recurring revenue, an approximately 30-fold increase over fiscal 2025. This forecast is predicated on successful deployment of its planned infrastructure expansion and should be viewed as a forward-looking statement subject to significant risks. To fund that expansion, QumulusAI has secured substantial financing. There's a $90 million convertible note facility from investment firm ATW Partners for GPU hardware procurement. And in October 2025, the company announced a $500 million non-recourse financing facility through the USD AI protocol, a blockchain-backed credit facility that allows QumulusAI to borrow stablecoins against its deployed GPU assets. That's a novel and somewhat unconventional financing mechanism worth paying attention to. On the valuation side, between January 2025 and June 2026, shares of the company's common stock were issued to private investors at prices ranging from $3.00 to $23.15 per share. The company emphasizes in its filings that these historical private placement prices may have little or no relation to the public trading price. Prior to pursuing the direct listing, the abandoned reverse merger with Vincerex Pharma implied a valuation of $285 million. IPO Details, a direct listing. QumulusAI is going public via a direct listing, not a traditional IPO, and this is a critical distinction for investors. In a direct listing, the company does not issue new shares to raise capital. Instead, existing shares held by early investors, employees, and insiders are made available for sale to the public. Consequently, QumulusAI will not receive any proceeds from transactions on its listing day. The primary goals are to provide liquidity for existing shareholders and to establish a public market for the stock. The opening price is not set by an underwriter. Instead, it's determined by a price discovery process managed by NASDAQ, collecting buy and sell orders from brokers and finding the price at which supply and demand meet. This can lead to greater price volatility compared to a traditional IPO. Here are the key listing details. The company is QumulusAI Inc. Ticker symbol QMLS. Exchange NASDAQ Global Market. Listing type direct listing, resale of existing shares only. Listing date July 16, 2026. Shares registered for resale 39,472,531 shares as per the June 26, 2026 filing. The company is not selling any shares. There is no set price range. Opening price is determined by market orders. The company receives no proceeds. Financial advisor, Chardin Capital Markets LLC. Note, no underwriters. And existing shares held by directors, officers, and shareholders owning more than 10% are subject to a 6-month lockup restriction following the listing. Competitive analysis. QumulusAI enters a fiercely competitive market for AI cloud infrastructure. It faces two main categories of competition. First, the hyperscalers. These are Amazon Web Services, Microsoft Azure, Google Cloud Platform, and Oracle. Their primary advantages are enormous scale, global data center presence, extensive customer relationships, and vast financial resources. For many enterprises, these providers are the default choice. However, their size can mean less flexibility, longer wait times for the latest GPUs, and service models not optimized for smaller, AI-native companies. Second, and more directly competitive, specialized AI cloud providers, or neoclouds. Key players here include CoreWeave, Lambda, Crusoe, and Nebius. These companies are purpose-built for the AI era, focused on high-performance GPU access, and are competing directly with QumulusAI for the same limited GPU supply from NVIDIA and the same pool of AI-native customers. QumulusAI's Cloud Plus Power model of owning its own power generation is a key point of differentiation within this peer group, as many competitors rely solely on colocation facilities and grid power. QumulusAI's self-described advantages, its vertically integrated model, rapid 90-day deployment, focus on the mid-market, and its use of modern financing mechanisms like asset-backed crypto loans. Its disclosed weaknesses include a history of losses, high customer concentration, significant execution risk on its massive expansion plans, and a still-emerging brand. Management team. Information on the full executive team is limited in available research data. The key leadership appointment highlighted in company materials is the Chief Executive Officer. Mike Maniscalco serves as Chief Executive Officer. He was appointed as CEO of QumulusAI in 2025. According to company materials, he previously served as the Chief Technology Officer of Applied Digital, another company in the digital infrastructure space. His appointment coincides with the company's strategic pivot and rebranding to focus on AI infrastructure. His background in technology and infrastructure is central to executing QumulusAI's complex, vertically integrated business model. Details on other executive officers such as a CFO or COO and the board of directors' composition were not disclosed in the sources reviewed for this report. Key risks. As an emerging growth company in a highly competitive, capital-intensive industry, QumulusAI faces significant risks detailed in the risk factors section of its S-1 filings. Investors should carefully consider all of these. Risk number 1. Customer and channel partner concentration. A substantial portion of QumulusAI's current GPU-as-a-service revenue is generated through a single channel partner, RunPod. The loss of this partner or significant changes in that relationship could materially damage the business. Similarly, hosting revenue is concentrated in a limited number of customers. Risk number 2. Supply chain and supplier dependence. The company is critically dependent on securing high-performance GPUs, most notably from NVIDIA. The semiconductor supply chain is complex and vulnerable to geopolitical tensions, particularly around Taiwan, manufacturing delays, and equipment failures. Any inability to procure necessary hardware would directly impede growth. Risk number 3. Power availability and cost. Operations are extremely power-intensive. The company faces risks around power availability, reliability, and pricing. Importantly, SEC filings note that some long-term power agreements were based on non-binding letters of intent, with no guarantee that definitive, favorable agreements will be executed. No power, no GPU operations. Risk number 4. History of losses and unproven profitability. QumulusAI has a history of generating net losses and is still in early-stage commercialization. Massive upfront capital expenditure for infrastructure precedes revenue at scale, and there is no guarantee the company achieves or sustains profitability. Risk number 5. Intense competition. Competition from hyperscalers with vastly greater resources and from well-funded neoclouds like CoreWeave and Lambda is severe. There is no assurance QumulusAI can compete effectively and capture meaningful market share. Risk number 6. Direct listing volatility. Unlike a traditional IPO with underwriters to support the initial price, the opening price of QMLS is determined by market forces alone. This can lead to significant price volatility in the initial days of trading. Post-IPO growth catalysts. Despite the risks, several potential catalysts could drive significant growth and value creation. Catalyst 1. Aggressive infrastructure expansion. The company has a clear expansion roadmap, from 18 megawatts in 2026 to 2.5 gigawatts by end of fiscal year 2027. If successfully executed, this would position QumulusAI as a significant player capable of serving much larger contracts. Catalyst 2. Substantial secured financing. The $90 million convertible note from ATW Partners and the $500 million asset-backed facility via USD.AI protocol provide the capital needed to purchase in-demand NVIDIA GPUs and build data centers. This converts the expansion plan from aspiration to potential reality. Catalyst 3. Growing demand for AI compute. The macro environment is the most powerful catalyst. Demand for AI training and inference is growing exponentially, far outstripping current supply. As a pure-play provider of this scarce resource, QumulusAI is positioned to benefit directly from this trend, if it can execute. Catalyst 4. Access to public markets. Becoming a publicly traded entity enhances credibility and transparency, critical for securing multi-year contracts with large enterprise clients. The public stock also provides an equity currency for future acquisitions and capital raises. Catalyst 5. State-of-the-art technology. The company's focus on deploying the latest generation NVIDIA hardware, Blackwell B200 and B300, Hopper H100 and H200, positions it at the cutting edge of AI performance. This can attract premium customers who require the best possible performance. Conclusion. QumulusAI, ticker QMLS, presents a high-risk, high-reward investment proposition. It is a pure-play bet on the continued exponential growth of artificial intelligence and the corresponding demand for specialized computing infrastructure. The bull case is compelling. The company has a differentiated, vertically integrated business model that directly addresses the critical bottlenecks of power and speed in AI infrastructure. Its neocloud focus on a purported underserved mid-market segment, backed by substantial secured financing, creates a clear path to potentially explosive revenue growth. The projection of $300 million in annualized recurring revenue in its first year as a public company, if achieved, would validate the entire strategy. And the secular tailwinds for AI compute are undeniable. But the bear case is equally significant. The ambitious growth targets require flawless execution in building data centers, securing power, and procuring highly contested GPU hardware, all in a fiercely competitive environment. The company's history of losses and the capital-intensive nature of the business mean profitability remains a distant and uncertain prospect. The disclosed reliance on a single channel partner, RunPod, is a major concentration risk, and the direct listing structure, without underwriters, exposes early investors to significant initial price volatility. In conclusion, QumulusAI is an archetypal growth story. An investment in QMLS is a vote of confidence in the management team's ability to execute an extremely ambitious plan in a hyper-competitive market. The upside is considerable if the company can scale successfully, but the risks related to competition, customer concentration, and the sheer operational complexity of rapid expansion are very real. Investors should approach this direct listing with a thorough understanding of both the immense opportunity and the profound risks involved.